Hello students, now we'll move on to the chapter number 3, agricultural income. In the previous chapters we have done with introduction to taxation, where we have learned what do you mean by tax, types of taxes, the various definitions, and what are the rates at which a person is liable to pay taxes. If you remember the chapter number 1, in chapter number 1 we have learned that income tax is levied on all incomes other than your agricultural income. So the constitution entry number itself said that you cannot levy the tax on income tax on agricultural income. So in a general scenario, the definition of agricultural income which you are assuming may be something different. But when it comes to the definition of income tax, the meaning of the word agricultural income is something different. So for example, let's understand in a common scenario, what do you mean by agricultural income? You can have some guesses. Take a pen and paper, write down the list of some items where you feel that this is what is agricultural income or this is what is agricultural activity, which according to you can be exempted from income tax. A general assumption will be anything which is done in the rural area or which is done by the farmers is called as agricultural income. That assumption is wrong. So let's move on with the chapter and try to understand what do you mean by agricultural income. You keep your 10 points ready which you want to write and which you feel that is a agricultural income and that should be exempt. Okay, then we'll analyze the definition. Then we will discuss whether it is agricultural income or not. You can cross verify yourself whether it is agricultural activity or not, agricultural income or not, which is exempt from tax. Moving with the concept, you can see there, this chapter mainly deals with your agriculture, as I told you. We will learn in this chapter what do you mean by agricultural income. Okay. First, before we start with the chapter, please remember that as I told you, agricultural income is completely exempt from tax under section 10 subsection 1 of Income Tax Act 1961. Okay, let's see that. As per section 10 subsection 1 of the Income Tax Act 1961 exempts agricultural income from income tax. So remember that all incomes are taxable other than agricultural income. But there is an exception to this, where it says the net agricultural income is added to non-agricultural income computed as per income tax law to determine the tax only on non-agricultural income. This is a special procedure which is known as a partial integration scheme, which we will study in the next parts of our chapter. Okay. So however, don't worry, this process of clubbing or integrating agriculture with a non-agriculture to determine the tax liability on non-agricultural income is only for individual, HUF, EOPBOI or AJP. Okay, it will not be for company, artificial juridical person and your local authorities. This is only for 4 persons which is there. So you can say that the basic rule is agricultural income in India. This is also very important that you should note. Agricultural income in India is only exempt from tax. Agricultural income in India is only exempt from tax. So for that purpose, I'll give you one more point that you people should note. It is like this. Income tax is levied on what? Income of a person. Income of a person. In the first chapter, if you people remember, your income is broadly categorized into 5 heads. Okay. Your income from salaries, income from house property, income from your business or profession, income from capital gains, and income from other sources. If you remember, all these 5 heads of income were gross total income. All these 5 heads of income was known as gross total income. From that gross total income, there are certain deductions which are given under section 80C to 80U. If you deduct that, whatever you get is a total income on which we are liable to pay tax. So this is what we have learnt in the chapter number 1. The same thing in chapter number 2, we have learned that incomes are broadly categorized into two types. One is agricultural income. Incomes are broadly categorized into two types. One is Indian income. Another one is foreign income. Okay. All these incomes which we have can be in India. All these incomes can be outside India. And you have also understood that based on residential status, we will tax Indian income and foreign income. Okay. So for this purpose, for the chapter number 3 purpose, incomes are broadly categorized into two types. One is agricultural income. Another one is non-agricultural income. All these incomes which I told you which are taxable, salary, house property, your PGBP, your capital gains and other sources, comes under the heading of non-agricultural income. So it becomes very important for you to understand what do you mean by agricultural income. So for that purpose, section 2 subsection 1a has given a definition of the word called agricultural income, which is completely exempt under section 10 subsection 1, irrespective of the amount. Whatever may be the amount that you have, completely exempt from tax. Okay. So let's go through the definition and try to understand what do you mean by that agricultural income. So as I told you, I asked you to list down certain 10 items which can be said as agricultural income. Some list you might have written. Now keep that list with you. We will compare that with the definition that we are going to study in the next 30 minutes. And we will try to understand what is that agricultural income is all about. Okay. As per section 2 subsection 1a, agricultural income in India is broadly are only three types. First one, any rent or revenue derived from land. First is any rent or revenue derived from land. Second is any income derived from such land by agriculture or from processing of agricultural produce. And the last one is any income from farmhouse. Any income from farmhouse. So as per section 2 subsection 1a, we have three parts of the definition. A bit says any rent or revenue derived from land. B bit says any income from agriculture or processing of agricultural produce to render it fit to market. Then last one says income from farmhouse. Only these can be said as your agricultural income. Okay, let's try to analyze the details of that agricultural income. If you go in little depth of your agricultural income definition, if you go, as I told you, section 2 subsection 1a has given only three subsections, A, B, C. Let's analyze one by one. First one, rent or revenue derived from land. Okay. To say it as agricultural income as per ABIT, there are 3 points that you have to keep in mind. First one, you should get a rent or revenue. Such rent or revenue can be in the form of cash or it can be in the form of kind. See, you know, in the villages, like I have a piece of land. That piece of land I'll give it to someone, okay, who does agricultural activity. I am in Hyderabad where I don't do any agricultural activity. So for that, per acre, that fellow will pay me per annum some X amount as a rent. 10,000, 20,000, 1 lakh based on the demand. Or the agriculturalist says that I can't pay you in the form of cash. Rather what he does, you know, he invests in the land. He'll produce an output. The output is going to share with me in the form of my income. If you understand Telugu, they'll say that Bhumi Kaul Kichanantar. Ante, it is something like my agricultural land is given on lease. So he has to pay me a lease rent. Now he being a farmer, he can't pay you a lease rent. So what he said, I'll invest in the land. I'll produce an output. The output we are going to share 50-50. So like that, you can have a rent or revenue which is shared in cash or kind. And most important thing, that land should be used for agricultural purposes. The most important thing that you have to remember is land should be used for agricultural purposes. If the land is used for any purpose other than agricultural purposes, it cannot be said as agricultural income. And the third important part is that land should be only in India. The land should be only in India. This exemption of agriculture or this definition of agriculture covers only for the lands which are covered there in India. If you have the same land outside India, then it is not an agricultural income as per the definition for the purpose of exemption. Clear? So the first one, as per section 2 subsection 1a, you have three things, A, B, C. In that A we have learnt rent or revenue derived from land. So that rent or revenue which you have derived from land can be in the form of cash or kind. Second, the land should be used for only agricultural purposes. Then third, land should be in India. Then if you come to the B bit, it has got two parts. We will divide into two parts. Part 1, income from agriculture it is called. And part 2, processing of agricultural produce. These are the two parts that we have. Let us analyze this separately. Let's start with the first one now. In that, income from agriculture. Now in order to get the character of agriculture, there are two stages or levels we can say, which is technically called as operations. One is called basic operations. Second one is called subsequent operations. Okay, basic operations is like on the land, like you go for tilling of the land, soaking the land with water, seeding the land, and till small plants come up in the land. One important point you people remember is that this basic has got two parts. One, land connection is mandatory, plus it should be done by human efforts. Should be done by human efforts. Two things are very much mandatory for agriculture, which is basic. In basic operations, land connection mandatory, human efforts mandatory. Without land connection, without human efforts, if anything is grown, that you won't get the character of agriculture. Once the basic operations are done, then the subsequent operation follows. What? On your land, when the crop is ready, what's your next job that you do in the crop, on the crop? See, this is an agricultural activity where purely we are related to the nature. You have to put a fence to protect your crop. You have to go for pesticiding. Okay, you have to cut the undesirable growth. You have to take care of your crop. That's it. Most of the times agriculture is done by the nature. Only we in subsequent operations, we just take care of it. That's it. Give a proper water. Take care of that. All those things. That's it. Apart from that, we don't do anything in the subsequent much. And subsequent should be followed with a basic. Pakka it should be followed by basic. Without doing basic operations, if you do subsequent operations, there is no character of agriculture and it is not called as an agricultural income. Pakka basic operations are mandatory. So once this is out, the crop will be ready. Cut the crop and sell in the market. You will get income, and such income is agricultural income. Okay, this is part 1. In part 2, whatever the agricultural produce that you got, if that agricultural produce doesn't have a ready market, it should be processed again to make it fit to market. To make it fit to market. See, some productions which are there in the agriculture doesn't have a ready market. When I say ready market, it's not that someone is buying. A end user should buy, and there should have an active market for it. Example, in my farm fields, I produce paddy. Now you tell me, do paddy have a ready market? Don't tell me that some distributor will buy, wholesaler will buy, retailer will buy. No. Have you seen any time paddy being sold in the retail shop? Will any ultimate customer buy? The answer is no. So what does it do? That the paddy goes to rice mill. They take out something called rice. They take out something called rice. Now this you see, have you ever seen the rice having the market? Have you ever seen the rice sold in the retail market? The answer is yes. So understand, paddy doesn't have a ready market, but rice has a ready market. So the processing of paddy into rice is also called as agricultural activity, and the income which is earned is also known as agricultural income. is also known as agricultural income. So like these two parts we have. Okay. Sometimes every agricultural produce will have a process further to be done. That is not agriculture. I'll give you another example to understand. Like for example, in a farm fields, I produced sugarcane. Now you tell me one point, does sugarcane have a ready market or not? Answer is yes. Ultimate customers will buy. You see a number of type on the roads, vendor being selling the sugarcane. So agriculture character stops. From this will be taken by the sugar factory, and they produce something called sugar. So please understand, this process is non-agricultural income. This process is non-agricultural income. So this is the difference between processing of agricultural produce to render it fit to market, where already it has a ready market, then we do it. Because one's output is another person's input for sure. Okay. So this is how you will get your second part, which is your agricultural thing. Then when it comes to the third one, CBIT. CBIT says your income from farmhouse. CBIT says your income from farmhouse. Now for us in Hyderabad, if you see in and around Hyderabad, easily you will have some 2,000, 5,000, 10,000 farmhouses. Okay, what is farmhouse for us? Farmhouse for us is an enjoying spot. But do you know the real meaning of the word farmhouse? The farmhouse is something like this, where you have a farm field. In your farm field, where you are doing all the farming activity, where here you should have a small house, which is used as a dwelling house, storage of crops and other let out purposes for a labor. This is the purpose for which we should have farmhouse. But what is the true reality of farmhouse? You have a farm field, in that complete house is there with a swimming pool, courtyard, garden and all. Here a small farm is done. This is not farmhouse. That will be categorized as non-agricultural income. This is called as farmhouse, where majority of your land should be used for agricultural operations, where minority of the land should be used only as a storage or a dwelling place of that labor who is doing there, or even for the farmer you can have it as a house. That is called as a farmhouse. Clear? So these three, your rent or revenue derived from land, any income from agriculture or processing of agricultural produce, and the last one is your income from farmhouse. These are called as agricultural income in the definition. Okay, so let's read the definition again now. As per section 2 subsection 1a, any rent or revenue derived from land is ABIT. Any income derived from such land by agriculture or processing of agricultural produce, and the last one, any income from farmhouse. A detailed material I gave you for income derived from land situated in India. Land should be used for agricultural purposes. You can see there, basic operations is there, subsequent operations is there. All those details I have given you in my material. Then further, if you see, the details things are being given. The rent should be for land, revenue from land. All those definitions are being given thoroughly. Okay. So there again some examples I gave you. What do you mean by agricultural income? What all comes under the concept of agricultural income? What all doesn't come under the concept of agricultural income? In your notes very clearly it is given. Okay. You apply these logics which I have explained to you now, either A, B or C. So to get the character of agriculture, it should be either A or B or C. If it doesn't fall under these three, it is not an agricultural income. Now I asked you in the beginning of the session, where I asked you to list down the 10 cases where you said as agricultural income, we thought as agricultural income. Now what do? Fit in that three any one of your assumptions which you thought as agricultural incomes and check. Yeah. Let's move on to the next one now, where let's see the taxability of agricultural income. Now we have seen the definition, what is agricultural income. Now all of you have understood what is agriculture, what is non-agriculture, right? Let's see the taxability of agricultural income now. Okay. First, the first thing that you have to understand is rule. What is rule? The rule is agricultural income is completely exempt from tax under section 10 subsection 1. Whatever may be the amount, how much you may have lakhs, crores, anything, completely exempt from tax. There is no limits on it. Whereas if a person has a non-agricultural income, such non-agricultural income will be fully taxable if such non-agricultural income exceeds the basic exemption limit. So as per the new law today, the basic exemption limit is 3 lakhs per annum. So if your non-agricultural income is more than 3 lakhs, then you are liable to pay tax. So this is what is the basic rule that you should not forget. But this basic rule is applicable for all persons, you can say. Now this basic rule has got certain exception. This exception name is partial integration scheme. What do you mean by partial integration scheme? It is a mathematical magic which is done by the income tax department to tax only non-agricultural income for sure, but at a higher rate. It's a simple funda of partial integration scheme. The basic scheme also says that I'm going to aggregate agricultural income with non-agricultural income, but I'll be taxing only non-agricultural income. You don't worry, agricultural income is exempt. Now, if that is the case, why you want to tax your agricultural income by combining? You can simply follow the rule, no? Answer is no. Yes, you follow this, you will understand that agricultural income is exempt. And again, mathematically, I'll prove that agricultural income is really exempt. But to apply this partial integration scheme, there are certain conditions which are there. That conditions need to be satisfied. What are the first condition? Assessee must be individual, HUF, AOP or BOI, and AJP. Means this scheme is applicable only for these four. This scheme is not applicable for partnership firm, joint stock company, local authority. Simply you follow the rule and leave it. If you have agriculture income, exempt. If you have non-agriculture income, it will be taxable. Simple funda. Second is that agricultural income should be more than 5,000 rupees. Your agricultural income which is there per annum should exceed 5,000 rupees. And third thing is that your non-agricultural income should exceed basic exemption limit. In the new scheme, as I told you, the basic exemption limit is 3 lakhs, and the old scheme, the basic exemption limit is 2,50,000. So this is what you need to understand, the three conditions which need to be satisfied. Okay, what are those? First one, assessee must be individual, HUF, AOPBOI, AJP. Agricultural income should be more than 5,000. Non-agricultural income should be more than basic exemption limit. And when all these conditions are satisfied, all should be satisfied, not only one. If all are satisfied, then tax liability on non-agricultural income is calculated as follows. Please understand this carefully. We are calculating the tax liability only on non-agricultural income. Agriculture income remains exempt. What is that? First one, steps. Step 1. Agricultural income plus non-agricultural income. Take both, add. You find out the total. Step 2. What is step 2? Tax on step 1 amount. When you calculate tax on step 1, only calculate tax. Forget about surcharge, forget about rebate, forget about health and education cess. Don't worry about this. That we will see later. Okay, only calculate the income tax. Step 3, agricultural income plus basic exemption limit. You add these two. Take the agricultural income, add the basic exemption limit. Then you will get an amount. Then step 4, tax on step 3 amount. Whatever you got, on that calculate the tax again. Again, when I say tax, calculate only tax. Don't worry about surcharge, health and education cess and all those things. Then last step 5, which is tax on, again I am repeating, it is non-agricultural income. is nothing but step 2 tax minus step 4 tax. Step 2 tax minus step 4 tax. You got one tax in step 2, you got one tax in step 4. Step 2 minus step 4, you do it. You will get your tax on non-agricultural income only. Once you get this, on that you add surcharge or deduct rebate as applicable. Then you add health and education cess at the rate of 4%. Then you will get tax payable. So this is the procedure that we follow if a person has got agricultural income more than 5,000, non-agricultural income more than basic exemption limit. And the assessee should be only individual, HUF, AOP, BOI, AJP. These 4 categories only. And all the 3 conditions should be satisfied. When it is satisfied, then you follow this procedure. Now, as I told you, what is the logic in this procedure? Very simple. You look at the logic. Our tax on non-agricultural income is step 2 minus step 4. Yes or no? What is step 2? Agricultural income plus non-agricultural income tax. What is step 3? Agricultural income plus basic exemption limit. So as per max, you solve this equation: agricultural income plus non-agricultural income minus agricultural income minus basic exemption limit. So department gave a clarity that agriculture cancel. From non-agriculture, we are giving the exemption of basic exemption limit also. So indirectly, we are taxing only non-agriculture, or directly we are taxing only non-agriculture income. We are not taxing agricultural income. This is a conclusion what department has done in these 5 steps. But understand one logic. The logic is right. They tax only non-agriculture income. They will not tax agricultural income. But it will be taxed at a higher rate. This is the logic. Sir, how it has been jumped to higher rate? You know, our income tax is a slab system. Now, once you keep on adding agriculture with non-agricultural income, what happens, you know, your slab rates will jump. And from 5%, you may move to 10%. From 10, you may move to 15. From 15, you may move to 25. From that, you may move to 30. Like that, your slabs can also increase. Different slab rates can be increased. And if you take purely non-agricultural income, you may be taxable only at 5%. But if you take non-agriculture plus agriculture, you may move to 10%. Like that, different rates, we will jump it. That's the logic of this aggregation. That's it. Apart from that, there is nothing in this taxability. Okay. So let's move on with the steps and see. Taxability of agricultural income. Scheme of partial integration of non-agricultural income with agricultural income. The partial integration of non-agricultural income with agriculture is applicable if the following conditions are satisfied. First one, the taxpayer should be individual, HUF, AOP, BOI and AJP. Only for these 4 categories of persons, this is applicable. Whereas your non-agricultural income should exceed the minimum exemption or basic exemption limit, and your agricultural income should exceed 5,000 rupees. If all these 3 conditions are satisfied, how do you tax it? Compute agricultural income plus non-agricultural income. Then tax on step 1. Step 3, agricultural income plus basic exemption. Tax on step 3. Step 2 minus step 4. Cess, balance will be tax payable. So this is what is the taxability of your agricultural income. Okay, let's move on to the next one, that is composite business income. We have seen what is the definition of agricultural income. Then we have seen the taxability of agricultural income. Now the next one is composite business income, where a income is a combination of agriculture and non-agricultural income. When that generally does that happen? It is like this. You know that the activity which we do now with this understanding can be broadly categorized as agriculture and non-agriculture. Let's take an example. Producing sugarcane is what? Agriculture. From the sugarcane produced, if I am going to produce sugar, that is called what? produced a sugar cane by doing basic operations, subsequent operations, and the output is being sold. And with that output which is being sold, he arrived at some income, he derived certain income. That income is known as agricultural income, and that is completely exempt from tax under section 10 subsection 1. Under section 10 subsection 1, there is no tax on it. When, let's assume this is done by Mr. X. This is done by Mr. X. Now this Mr. Y takes this output, agricultural output, as his input. He processes it and takes out a final output called sugar. This is not processing of agricultural output as an input and again producing another output. No. This is a business income where the sugarcane itself has a market. As sugarcane itself has a market, your agriculture character stops. The income of Mr. X will be agricultural income, which is exempt. The income which is earned by Mr. Y is a non-agricultural income, and this will be fully taxable. This will be fully taxable. So this is what is the difference between agricultural income and non-agricultural income. Now the point is, production of sugar cane is done by Mr. X, and sugar factory is also done by, owned by Mr. X, where he is producing a sugar. Means your agricultural activity and non-agricultural activity is done by the same person back to back. So the agricultural income is not being generated. Whatever is produced in the farm fields is directly taken to the factory to produce a sugar cane. So where is the question of agricultural income generation? So what do you do? Now when he is selling that sugar, that sale of sugar can be said as non-agricultural income. The sale of sugar can be said as non-agricultural income. But where we are missing the agricultural income also. So what law said? This is a composite business income, which is a composite business income. So how to segregate this into composite and agriculture and non-agricultural income? For this purpose, what they have done, they have given in rule 7 and 8, some rules are given. How much portion is said as agriculture percentage and how much portion is non-agricultural percentage. Okay. Now this is specially for tea, coffee and rubber, which is manufactured in India, which is known as growing and manufacturing of tea, coffee, rubber in India. So what central government has done, they have directly given the percentages of agricultural income and non-agricultural income. So as I told you, this composite business income is a PGBP income. So you have to do the complete computation of PGBP from sections 28 to 44. Total computation you have to do as per those sections. Then whatever the final output that you get, that is non-agricultural income. That is both agriculture and non-agriculture. That has to be split into agriculture and non-agriculture. A fixed standard percentages are given for both agriculture and non-agriculture in respect of tea, coffee, rubber in India. Whereas if it is apart from tea, coffee, rubber in India, any other case is there. Fair market value of agricultural produce is agricultural income. PGBP business income minus fair market value will be non-agricultural income. This is for any other thing. Okay, let's see that rule 7 and 8 which is given under the law. You can see here agricultural income plus business income, it is called. This we call it as a composite business income, wherein where the agricultural produce is used as a raw material in the manufacturing process, the average market price of the agricultural produce consumed during the previous shall be debited to the manufacturing account of the business. Because when you do only sugar manufacturing, pakka you will buy the raw material from the market. Now we are not buying the raw material from the market. The raw material is used in from our own farm fields. Farm fields we have produced the agricultural produce. The same thing is used in the manufacturing process. So debit will be zero. But it cannot be zero, as you know, in the PGBP. Majority of the PGBP, what happens, you know, our income minus expense is only profit. So expense should be there. So fair market value should be considered. No other deduction toward agricultural operation shall be allowed. Where market price is determinable, you can take that price. Where it is not determinable, you take the expenses of cultivation, land revenue or rent or reasonable profit as determined by proper officer. Example, manufacture of sugar from sugarcane produced by the SSE from his own farm field shall be computed by applying rule 7. So what are the steps that we need to follow in computing your composite business income or splitting your composite business income into agriculture and non-agriculture? It is something like this. Step 1. Compute the income under the head PGBP by following your chapter 6D of the above business. Then compute agriculture income and non-agriculture income is done in the following manner. Segregation. It is called segregation process, where if you see there, agriculture, non-agriculture. Rule 7A says sale of centrifuge latex, Senex, latex-based creeps, brown creeps, or any of those specified block rubbers technically for manufacture or production of rubber in India. 65% is agriculture, 35% is non-agriculture. Similarly, sale of grown queued coffee by the seller in India, 75% agriculture, 25% non-agriculture. Sale of grown queued roasted grounded coffee by seller in India with mixing chicory and other flavoring ingredients, 60% is agriculture, 40% is non-agriculture. If you see all those, last one, tea, for tea 60% is agriculture, 40% is non-agriculture. If you see all these percentages, agriculture income portion is more and non-agriculture portion is less, because lot of efforts is required in the agriculture and less efforts will be required in the non-agriculture. That is assumption of the government on the segregation part. If it's any other case, rule 7 says any other case, like as we thought from sugar cane, we produced sugar and we sold that sugar. So whatever you got, that how it has to be segregated. Market value of agricultural produce is agriculture income. Business income minus market value of agricultural produce is non-agricultural income. So once you do this segregation, what happens, you know, you will get agriculture income and non-agriculture income. You can follow with the taxability part. Okay. So this is the last concept in your agricultural income chapter. So what all we have studied in this? First, we have seen the definition of agricultural income. Second, we have seen taxability of agricultural income. Third, we have seen the composite business income, how it will be divided into agriculture and non-agricultural part. Okay, let's do some problems on this to get a more clarity on the taxability of agricultural income. Stop.